Hey, what's up, everybody? All right, this is Chef again, and what I want to give you guys today is just a little quick breakdown on what's going on with the market and why it played out the way that it played out today, right? The biggest thing is, if you guys didn't watch the previous video, I told you guys that below 41 and this 41 like 20 level, we're definitely going to see some more downside, right? The biggest thing to look for is when you're breaking a weekly time frame. The small time frames are not going to give you a lot of conviction. And not saying that you can't take a trade to the downside on the smaller time frames, but it's the smaller time frame that's not going to fully give you uh, the full picture as to a good break. What do I mean by that, man? Maybe some of you guys are confused, right? Well, everything looks so bearish in the market. Okay, so I can agree 100% with everybody out there who's bearish in the market overall. We've been saying that since this pattern had played out, which was your head and shoulders pattern. And you guys remember that if you guys have been following me. If you haven't, then you're probably missing out the big picture. I don't care right now what the world is saying. I don't care how inflation is, recession talks and all this stuff. I don't really care about that because that's not what I'm trading. What I'm trading here is a break of a level or a bounce of a level or a rejection. Whatever comes first, that's exactly what I'm trading. How do you know a weekly time frame is going to be valid? What you want on the weekly time frame is that the smaller time frames, you want more momentum. Okay, that is the biggest reason why I tagged my team today, and I told them to be careful with this downtrend. This downtrend, there was no momentum. I told the bulls to be patient, and I said the bears to watch their positions because this was not a momentum break. Usually, when there's a weekly time frame break, there's a lot more momentum, a lot more volatility, and the market in general follows as a whole. Okay. In this case, the market did not follow as a whole, and everything was just kind of holding steady with no momentum on the break. Okay. Now, the break happened midday. Those are those times where you can take a slower position and just kind of hold that trend in itself. But in this case, we did not get that. Okay. So I want to be clear on this here, and the way that the strength of it can be is this week just started. Today is Monday, guys, and we did drop. So the reaction of the bearish sentiment is still here. Okay. I'm not saying that we're going to go 100% bullish, although I am leaning to the bullish side, number one, because we are a weekly time frame. Number two, this level here has held in the past, so most likely it will hold in the future. That's exactly what we're getting now. We're not making any lower lows yet. Today is Monday, like I said. And on the smaller time frame, the momentum just was not here today, even though this was a nice drop, base drop, right? So here's your drop. There's your drop right there. There's your base. And then there's your drop again. Okay. That's kind of the setup that was here today. And I actually shorted that with two candles, these two 15-minute candles. This green one was red, and then eventually it ended up going green. So on that drive down, I noticed that there wasn't a lot of momentum. I looked at, things like Amazon. I looked at like Apple, Google, just the financials, some of the healthcare, and there wasn't momentum. Usually when there's a break of a trend, a break of a weekly time frame, there's more momentum, there's more volatility, there's more increase of volume coming in because it's a major break. Okay, so that's why I didn't bag hold a short position here, even though I took a quick scalp position that made my money back on some ODTEs right here for SPY. I did grab a SPX call here, right here at this bottom at this like 4110 level, and it never went. I was green for like, I don't know, up and down for like about an hour maybe. And then this thing went red, and as soon as I did that, I knew that exactly at that point I was going to grab some put positions and make my money back. So that's exactly what I did, right? So I took a red trade on the call position. I took it a little early on the base, and then it broke below. So I knew to cut my position. I knew to go short, so I went short. And then here I got back in on the SPX call, and I'm actually green on it, right? It's over 20%, which is cool. How we're gonna wake up tomorrow, I don't know. I mean, we could definitely just kind of range in here the rest of the night. So these futures can, do something like this, kind of like that, or do something like this, and then just gap down all the way because of tomorrow with the Feds and stuff. But whatever it is, I don't know what they're going to say. I don't care. Okay. The biggest thing is understanding exactly why we had that V-shaped recovery today in the markets, and why we have a potential uptrend versus a downtrend on this specific play here. So the market in general is going to do whatever it wants with or without my opinion. And all I got to do is be prepared and be able to look for the proper momentum and the proper break of in order for me to take that position, whether it's going to be a long or a short, right? But yes, this is a very important level. If this candle closes red, if it goes red at any point and it fails here, this is already showing you a nasty trend where a lot of the buyers that were here in the past will not be present here. And at that point, it's just going to drive you like way down here as a bigger target. And that's going to be some very, very bad news for the markets. And like I said in the previous video, I really hope we do hold down here. Like I said, I'm not using hope as a signal or as a bias, but definitely as a sentiment that we need in this market in order for anything to just go bullish, because it's just a little it's a little it's a little oversold. It's a little beat down, broken down, and how much more lower can it go? The answer is it can go all the way to zero, because this market just doesn't care about you, right? Doesn't care about us. It doesn't know us. All it knows is that it's a well-oiled machine that's going to print money with or without us, right? And usually they're taking our money. But our goal is to be able to catch those run-ups and those rundowns in order for us to make money. So now what we're going to look for these levels is going to be anything over that 4150. Okay, so psychologically, just think 4150. If we're above 4150, look for 42. Once you look for 42, look for 4250, 4250. Look for over 4250 may get a little questionable. Let's just say we trend like this into tomorrow. Just a clear example. We're going to head into some resistance here, and because we're in a bearish market, all right, bearish sentiment, the higher probability is that it will get shorted up here. It may not get shorted here at these levels, and we may not, continue to the downside as aggressive. And if we don't have that tier, we may get it here. Okay, and who knows? It may happen overnight. We may wake up at 40.50. We may wake up below 41. Who knows? But I'm preparing you for the worst bullish case scenario, because we already saw a nice recovery into power hour in the market, and this is clearly a sign that bulls and bears are here, both fighting against each other at a major weekly level. That's going to determine basically the fate of the coming few weeks into the markets. So it's definitely a big fight, and it's not going to give it up that easy, unless the Feds come in and say something dumb, and it's just going to tank in some more. But whatever it is, we don't know what the reaction is going to be. All we can do is be prepared on the levels and understand where it's going to be the break above or the break below. Okay, so anything below the 41, guys, we're super bearish, basically 100% bearish. And over 4150, short-term recovery into that 4250. As high as this 43. Once we get to that 43 by the end of the week, then we'll get there. But just now, 4150 break above, 41 break below, right? And just to cover PayPal again, with everyone that was with me in the voice chat this morning, with my 1K account, I took it for a scalp position today. And the reason I did that was because of the markets trending down right at the open, and then it ended up popping later. So being able to identify what's going to show strength and what's going to show weakness is it takes a little more time to develop, and it gets a little confusing at sometimes, because you're sitting there wondering if you should or you shouldn't. How long should I hold for? Is this considered a day trade? Is this considered a swing trade? How long do I hold? Vice versa, all kinds of stuff like that. And when do I stop out? So it becomes an emotional setup. Okay. And you got to be able to be in and out of your positions no matter what happens. Okay, so what I saw here with PayPal is I took a swing on Friday. Okay, I called it out right here, and this thing was actually holding, but until that closing candle, this thing just collapsed and it put me in the red, which I wasn't worried about. So I went on the voice chat and I said, if this thing drops below this 87 right here, I may stop out. Okay, on my swing position, but I also said that it was showing some strength in the open, and this is basically a retest of a breakout of a small base, right? So I want to show you guys here so you can understand why I'm taking some of these plays. So here's your break. Okay, sorry, my TOS is a bit laggy. This is the earnings. Okay, so this whole thing is earnings. Let me take that off. All right, so there's your earnings. And here's your retest. So if this thing would have broken 87, I think it would have came down. As you guys can see, I had my alerts ready and set. And at this point, if the market would have dropped even further, I would have been in puts all the way to the downside with my, call position basically being stopped out, right? All right, so now that I have this here, I understand one thing. We're at this pre-market level and it started rolling up. Okay. All right, so let's do this. And then so I looked at this first 15-minute candle. I waited 3 minutes. This thing ran, came right back down, and then it showed a lot of strength right at the open. So breaking above this 88 and this 89 was a good conviction that this was going to be a long. So we entered early right here on the break of 88. And then started to go to 89 and 90. I scaled out here on the first 15-minute candle for a small profit, but my swing position ended up going into money around 90, and then it hit the highs of 92. I ended up taking profit up here just because I didn't care what happened next. And good thing I did, because then this dropped in here. It's get a nice retest. So now we're actually ready for tomorrow. And if we do continue a bullish market, now the setup here is actually perfect, and we can take another trade here for PayPal over 92 or dip by around 90. Okay, so you want the psychological number to hold, and you want 92 to break just so it can, basically break above this base here and, continue to the upside, potentially to hit this 100 level. But the first target would be around this like 97.70. So 96 to 98 basically is what we're going to look for. But then we're going to look for psychologically 100. PayPal is still a great company in my opinion, and I think it still has a lot of room to, trend up. And it doesn't have to go up tomorrow. This can have an inside day depending on what the market is, but definitely something to look out for, right? The other one is Facebook that we called out right at the open as well. So this one in Facebook, I personally did not take Facebook, but I did take PayPal. Was pretty loaded in this, and you can easily see here a rally-based rally. And we're kind of closed on top. So this has a lot of strength. Here's your buyers down here. So here's my blue line. And then now what I have is, this was my pre-market stuff right here, right? So once this started breaking over that 202 level, I knew that this was going to hold. Never broke down, never went red. So there's no reason to get into puts. And this thing just rallied for the first two 15-minute candles, the same as PayPal. And again, towards the end of the day, both of these tickers showed a lot of strength. They ended up green. So everything about it is pretty amazing, right? So it's going to be the same thing here for Facebook. Anything over 210 is going to be bullish. We're going to look for some more upside on Facebook. Again, if we have a bullish market, of course. And then we're going to look for these highs right here of 217.50, even potentially 220. But we're going to take it day by day into tomorrow. We're going to see what the pre-market holds. And I will definitely be with you guys early in the morning in voice chat again, trading Facebook, PayPal. I think financials, Disney, and a couple other more. I'll bring out some more tickers. But for now, I just wanted to explain the /ES and the way that it moved today. And hopefully we get a nice green week, because honestly, like I said, I really hope that we do have that. And again, not basing it off hope alone, but definitely just based off the levels. And again, just to show you the volume bar. The volume bar here is pretty big compared to the pretty drops lately. And well, let's see what this market holds, guys. You guys know that every green candle in a red market gets shorted, and every red candle in a bullish market gets bought up. So we'll see what happens. And yeah, hopefully this gives you a little more enlightenment as to how the markets develop today and gives you more clarity and understanding. If it doesn't, let me know, guys. I'm more than welcome, more than 100% available for you guys to come in and just ask whatever questions you guys can. It's in the free chat, guys. Tag me. It's all free. And yeah, let's look for some more trades in tomorrow. See you guys on next one.